Hey everybody, MortgageSeth here. The topic for today's discussion is how to qualify for a mortgage if you're self-employed. With the rise of the gig economy, more people working for themselves, 1099 employees, there are a lot more loan options if you're looking to buy a home that you can qualify for based on something other than your tax returns. So in the past, and probably you may think this now, that you need a full tax return with your income on it to qualify for a mortgage. And the problem with that is that a lot of self-employed people have a lot of write-offs for legitimate business expenses, and the bottom line income that we have to use for qualifying on a mortgage doesn't quite add up to the amount of money that we need to show that they can make the mortgage payment. So there's alternative programs. The first program that's really popular is based on your bank statement cash flow. So if you run a small business and you have 24 months of bank statements or even 12 months of bank statements, what we can do as loan officers, we can take a look at those bank statements, evaluate your monthly deposits, and determine a cash flow to base your mortgage qualification on. So most times that's going to be a lot more than showing on your tax returns for the bottom line income. So that's one program that's really popular, is we can use bank statements. Another program is to use 1099s. If you're a 1099 employee and you're, again, writing off a lot of your expenses when you do your taxes, then your income showing on your taxes that you're paying tax on isn't going to be high enough in a lot of cases to qualify for the mortgage that you want. So what we can do is we can take your 1099 income, we can apply a reasonable expense factor for the type of business that you have, and then we can come up with a usable income that, again, is typically a lot higher than the income that's showing on your taxes. And the last program that is usually reserved for investors, there's programs that even require no income documentation at all. If you're buying a property as an investment property, you have a significant down payment available, we can just use the projected rents from that property to qualify as your income to cover the mortgage. So again, a lot of technical details go into these things. Each program is more specific on the requirements. There's credit requirements, income documentation that we have to have that may or may not include your bank statements. But the point is that if you're self-employed, there's lots of options to get out there and try to compete in this housing market with great programs, great interest rates that you can qualify for, and I'm here to help you do it. So give me a call. It's mortgageseth.com, and I'm here to help.